Hey, all, Sean Maloney, Digital Business Masters, another macro look at all things digital assets and blockchain. But in order to understand where we're headed with that and why we stay the course, obviously it's key we look at the most valuable information in the world, which takes us well into macro and a lot of geopolitics, which isn't everybody's cup of tea. We understand that. But if you're going to work as close to the money supply as you are when you're operating with hard assets, then you do need to be very aware of the big picture. Otherwise, you will be gobbled up in the narrative and it will stop you in your tracks because it's just too much. I mean, the changes going on, as we'll talk about today, are quite extraordinary. But the irony is that as you own more and more sound money, the more you extricate yourself from that problem. Okay. The definition of insanity is doing the same thing over and over, expecting a different result. If you've been working in the fiat system for 40, 50, 60 years, and you're wondering why things are not moving the way you anticipated, then a big part of that is to do with the devaluing, debasement of fiat currency. So we're here to fix the money. The top down won't do that. So we need to build it from the bottom up, which is exactly what we've done with Bitcoin over the past decade or so. It's not just there, though. Part two, you'll see the link below to part two. You need to be inside the sanctity of the academy to access part two for very obvious reasons. We're working over there on some very sophisticated technologies, some very challenging technologies, and it's a case of making sure that we work inside a system and not just out in the world where every Tom, Dick and Harry can disrupt us. It's hard enough as it is. So the whole idea is you look at the big picture and then you move into actually applying what it takes to master that knowledge in real time. We're not here to give any advice, certainly not financial advice. Okay, so if you want financial advice, go and speak to a financial advisor. If you want to always seek financial education, then that's what DBM does. So we're more than happy to help you, especially when it comes to sound money assets. Our model is very simple, very simple indeed. It's just a case of mastering how we can create fixed incomes and variable incomes to complement and build up equity on a balance sheet for growth. So we're looking for reliability. We're looking for power surges, liquidity events. Many people start the process of attempting to apply what we'll talk about today, but for whatever reason, don't continue the process. And that's where variable incomes can, knock people sideways. So you've got to keep managing it. We talk about that in part two. And obviously the standard of dollar cost averaging, things like Bitcoin, gold, etc., is a fixture. You do that come hell or high water. It doesn't matter what's going on in the world. You always DCA sound money to protect yourself from debasement in fiat currency. We talk a lot about this particular aspect of the system in Module 5 of the Wealth Builder series, which has been released just this month, January 2026. That's a 12-month moduled series of educational steps, starting with mindset through skills, which is a very important part, especially if you're going to master variable income. And then you go into systems, which we'll talk about in part two, then income, then wealth, right? But without the first three setups there, mindset, skills and systems, you're not going to get to income. So the whole idea is to use what we've already done, the experience we already have in what the DBM Academy represents, and stick the course. Okay, learn and then stick the course. We're very passionate, very briefly, because of a very simple slide that I talk about every single week because, I don't know, does it fall on deaf ears? I'm not sure. But, part of our belief system, the way we've set up our mission statement at DBM Academy is not as much to do with money or fiat or Bitcoin or wealth or gold or balance sheets or cash flow forecasts. It's a lot to do with how to transition from debasing currencies that so many people go to work for and lots of people are prepared to strike for. And many people seem to have short memories that every 10 years or so, although it feels like it's accelerating over this since COVID, it's, this isn't enough. Public sector, private sector, particularly public sector, this isn't enough. I can't live off this. I didn't sign up for this. I thought I was doing a good job, and yet I can't get ahead, right? That's purely to do with people going out there, spending time and effort and energy on accruing currency that debases at about 8% per year. So the purchasing power that it's able to provide you debases that quickly. It's nothing to do with the prices of stuff. It's everything to do with the purchasing power of what you're using to buy that stuff, especially if you're just going out to buy liabilities directly. So that's not going to stop. I mean, we used to get very agitated about that back after 2008. Oh, the government needs to change. The bank system needs to change. They need to go back onto some sort of standard. They need to hold value in currency. They need to put currency back to money. If you don't understand what that means, then go to the Where to Start section of the Academy and learn the difference between currency and money. It's not going to happen. It's not going to happen, right? So the only thing we're left with is to find ways ourselves to go and move proportions of our energy and effort in the form of currency across to sound money and leave it alone. Just let that be. If you've been accruing gold, for example, over this past 10, 15 years, you'll know exactly what I'm talking about. If you've been accruing Bitcoin over this past 10 years, you'll know exactly what I'm talking about. That is it in action. What's not to get? Yeah, it's scarce supply, it's unlimited demand, and it's going through a process of realignment in the case of gold and silver, and it's going through the case of adoption in the form of Bitcoin. That's it, right? So if you do nothing else, learn how to accrue assets, allow equity and cash flows to build, and fund liabilities off your balance sheet. Don't buy liabilities. Set yourself up as a business. It's not difficult. The whole thing is a setup with regards to three main elements when it comes to the digital side of what we do. As I said, Bitcoin is a standard, but you're also able to apply equity to different methods of yield. Yeah, if you wish to do this. The Holy Grail, of course, is to have a perpetual cycle operational in your business. Yeah, an energy cycle, which basically means that you own an asset base that's reducing in supply and increasing in demand. That creates a price discovery, yeah, in fiat terms. You're then able to convert proportions of the equity across into yield. And that's what we're constantly hunting for. Ways not only to have that happen in the event, daily, weekly, monthly, quarterly, yearly, whatever, yeah, but also have it done in a conjoined sequence. So it's not just about having yield, it's about having equity and yield inside the same system. So we're working with a project that is the second most valuable digital asset on the planet, currently around $7,000 roughly per coin. That particular project is designed to create equity and yield in the same step, the same sequence. Now, is that easy? No. Do people understand it? No. Do people get involved with it and not have the resilience and patience to let the thing birth through and evolve? Of course they don't. So the companies behind these systems constantly have to evolve and adjust as they learn the behavior of their client base is outstripping the education of their client base. What we try to do at DBM is accelerate the education as opposed to continually changing, which causes some disruption even for the most educated. So there's lots of variables going on here with smart contracts and all sorts of different things. It's a case of understanding that equity and yield does exist in this life, and at a much greater, higher, more powerful rate than you'll ever find inside the traditional finance system. That's the bottom line. So I mentioned the Wealth Builder series earlier. If you want to understand more about the setup, the mindset, the skills, how to get into systems and manage those systems consistently and have the resilience to stick with it, that's what this series is designed to do. It's very simple. We're using AI technologies. We're constantly updating it. It's a case of working through the modules. We're on module 5 now, which is all about creating income. And then to 6, 7, 8, 9 and forwards, we look at how to convert that income into wealth and do the hardest thing of all, which is to maintain wealth, which is not easy at all. But most people are so busy trying to get income, they don't even think about that bit, right? But once you've got income, you've really got to get good at creating wealth. Now, we'll get into the macro stuff, which is actually a tailwind behind everything I've said. Right? This is the great thing about this industry. It takes a certain type of person. It takes, they say to become an expert at anything is 10,000 hours, right? People have got to question themselves, are you prepared to put that in? right? The reality is, if you spend 1,000 hours studying Bitcoin, you're going to be absolutely fine. I've never met an ex-Bitcoiner. The whole idea is, do people want to put the effort in to learn? Now, individuals are one thing, but it took the institutions and the banks and the bosses and the governments well over a decade to understand Bitcoin. And many of them still don't understand it. The people actually making decisions, so-called on our behalf, still don't understand it. They're more than happy to go through Keynesian traditional finance, economics, and just listen to these talking heads and think, well, it's always been like that, so it should always stay like that. No, definitely not. It's been like that since the Second World War, since Bretton Woods. That didn't make it right prior to that or now. The whole idea is that just because it's something you're used to doesn't make it right. But obviously you've got vested interest, huge vested interest. Just look at what's been going on this past week with the banking lobby as they look to protect the way they profit from the existing system. We'll talk more about that in a minute. At the end of the day, none of that really matters. Because this chart shows you the natural adoption. This is what actually is going on with this chart. It's the natural adoption, the natural realization. Yeah? And it's indisputable. Whatever you feel like you're going through right now in early 2026 is nothing compared to where we've been back in 2020 or 2017 or back as far as 2014. Whatever you think you're seeing here, you can 10x amplification back here. So these days is a walk in the park compared to where we've come from. Because now we've got institutional corporate investor regulation, all the rest of it, right? It's all part of what's happening with multipolar world, new world orders and all the rest of it. It's inevitable. It's irresistible, which, as you'll see, is the main tailwind that gives us the motivation to keep going, right? Above and beyond what we already know about looking after sound money in our own private lives. So the big macro and geopolitical headlines from the last week that we pick up, we do our best to sense check and verify. But at the end of the day, there's so much going on. I mean, this week has just been absolutely bonkers in terms of, and today started off Monday. I'm recording this on a Monday. Today started off with a real bang. And I've attempted to quickly scramble to get everything up to date on this macro page as of the 19th of January, 2026. So let's start with where we started off last week. Michael Saylor strategy buys another 13,500 Bitcoin worth 1.2 billion. The guy's not stopping. Okay. They're trying to give him bloody noses. They're trying to, disrupt what he does, including the Bitcoin maxis, but he's also getting a lot of stick from traditional finance. Where you think he stands and where you decide that guy stands with regards to him already being consumed by the traditional finance industry as being a tool, or whether you think he's an absolute, stalwart in helping the adoption of Bitcoin, you're going to choose somewhere in the middle, right? So it doesn't really matter. All that matters is that strategy mean business. And before long, they will by far and away be the largest company in value terms that's ever existed. There's no question about that. 13 trillion BlackRock now holds 2.3 billion worth of master. So it's all connected, yeah? So this is where you get this argument that he's just becoming a bit of a puppet for the big boys. That may or may not be the case, but it doesn't really matter at the level we operate at, because we're just normal privateer individuals who own an asset that's now indisputed in terms of its global demand. And all we've done is connect ourselves to a global balance sheet. If you've ever run a business and you've got your own little balance sheet in a little town, in a little city, in a little country, and that's all you can ever be valued at, then that's good. That's okay. That's fine. And that's more than worthwhile in terms of making a living. But with this technology, you're connected to hundreds of thousands of different companies' balance sheets. That's the difference. Yeah, we're on equal playing field with regards to the asset itself. One Bitcoin is worth one Bitcoin, period. Whatever people say or think, whether it's BlackRock strategy, Bitcoin maxis, anybody else, one Bitcoin is worth one Bitcoin, period. That's the clever thing about it, right? Germany's second largest bank, DZ Bank, has just approved Bitcoin for crypto trading. So again, the Europeans are slowly but surely waking up. And it's a case of making sure that, again, we use that as a slipstream. This next 5 years will come very, very quickly. In fact, this is going to happen much sooner than that. So if you're positioned even at 0.1 Bitcoin, you're doing well, very, very well indeed. The entire move from 90K to 97.5 last week, as it happened on the markets, as we could see on the various things we look at, was entirely driven by spot. So that's telling you that there's still huge amounts of public interest, energy coming from consumer sides of this. And that's good. 60% of the entire Bitcoin network is still owned by ordinary individuals at the end of the day. So, that's good to see. And then all of a sudden, we see change going on today. We'll touch on it in a minute. But total crypto market cap stayed above 3 trillion now for 30 straight days. Again, keep well above the canopy. Whatever you're listening to, whatever you're hearing, whatever jitters you might be getting, as long as you're in control of your assets, you're safe, you're secure, and you're in control of your liquidity, then you're fine. But 30 straight days above 3 trillion, that's the entire crypto market. That's the longest it's ever done that, ever. Okay, so these are big deals. Bitcoin, silver parity, and gold parity. This is something worth keeping an eye on. I should bring it back, really, shouldn't I? Maybe I'll put it in the Wealth Builder series. But we've got a document at the DBM Academy whereby we measure everything. The value of property, the value of the stock market, the value of pension plans, the value of your bank account, the value of savings, the value of whatever you want to value. We value everything back against gold and Bitcoin, period. And when you do that, you realize just how much better off you are because of owning gold and Bitcoin than if you've stayed in the equivalent mindset in fiat. Right? You're talking a lot in terms of where you stand over time. So looking at Bitcoin parity and gold parity, silver parity and gold parity, sorry, if and when, it is a when, Bitcoin catches up with where we're currently at with, say, gold, then you're looking at $1.6 million Bitcoin. Catches up to silver, $257,000 Bitcoin, right? There's a reason that the Bitcoin is significantly underpriced. And after all, gold itself is significantly underpriced. Yeah, right? So again, it's understanding the difference between currency and money. That's maybe for a topic for another day, but it's very, very big, and it's very, very in your face when you realize just how much Bitcoin, gold and silver that a lot of the big institutions and big governments have on account now. In fact, many governments are confiscating Bitcoin at the moment and not giving it back. Right? They're just leaving it on their own books. Yeah? Ignorant or complicit. You go figure that out. Davos this week. All right? So we have fun every January, having a look at Davos, looking at the talking heads. I've got a funny feeling this year might be a little bit more interesting than normal. So we'll keep an eye on that. Starts today. And we'll just see. What's been going on just this last weekend is quite extraordinary. We'll touch on it in a minute in the politics section. US Treasury injects $2 billion of additional liquidity through debt buybacks just in this past week. So, nothing stops this train now. We're back to QE, quantitative easing, and inevitably that just leads to more and more liquidity in the system, and inevitably that leads to more and more risk assets, as Bitcoin would stand still to be, including gold, as going up and up and up and up and up. It's just inevitable. All you have to do is go back through all the recessions of the past 20 years, or even 50 years, go back through what's been happening every time they printed currency into the system since 2008. And it's just so clear. It's not funny. It's so obvious what you should be doing as an individual in this era that we live in today. Interactive Brokers, the global retail and institutional brokerage, adds 24/7 funding with USDC on Solana. So a lot of these brokerage companies are now figuring out they're inevitably going to start tokenizing assets. They're inevitably going to start bringing more and more efficient ways for people to trade 24/7, right? Bear in mind that historically, still even in 2026, most of the markets only trade in trade hours 5 days a week. Right? Very shortly now, you're going to find 24/7 because of blockchain, because of the ability now we have with the technology. That just gravitates more and more normality into Joe Sixpack's head with regards to, oh, this is how it works. Oh, I see. And the next thing's inevitably going to be, well, who needs interactive brokers? I'll just work with AI. I'll just work with agents. I don't need to put all my trust and faith into 13 pairs of hands of middlemen looking after my pension, getting an annual statement very clearly in the small print saying, well, this is where you are now, and we hope you might be here by the time you're 65, but we can't promise anything. In the meantime, they're taking all the profits through fees every single day of your life. Right? All that's changing. Robinhood are going to bring big changes into that. tokenization of stock, etc., etc., etc. You know, your Hargreaves Lansdown, your AJ Bell. I mean, these are so dinosaur. They're just finished, right? Unless they do what Interactive Brokers is doing there, which is getting ahead of it as best they can. Not to mention all the people that will get thrown out of jobs, by the way, because of all that. Feel sorry for the Iranians, have done for many years, but many of them were able to at least be saved in some way because they listened to some of the things I've been talking about today. They had Bitcoin in self-custody, and they were able to at least stay some bit protected, because last week their entire currency just collapsed as nothing. So imagine waking up in the morning, going to your bank account, and everything's zero. That's basically what happened. Those who owned Bitcoin in that environment, as should be the case in, yes, very, very damaged countries that have been put upon by the International Monetary Fund and the US and Europe for many, many decades, they should be obviously listening very hard to what I've just said there. But so should people in Western societies. Don't think you're immune just because you wake up warm every day. Politics. Right. This is such a big topic. I mean, so what I've tried to do these days is a lot of what we pick up on as we go through the weeks and months, we convert into podcasts. Okay, so get over to the link below. You'll see the podcast section of DBM. We're now up on Apple. We're over on Spotify, etc. So you'll get lots and lots of access to the DBM podcast. It's simply because there's so much information, we can't possibly even get it distilled into this hour, right? And this has definitely been the case this week with geopolitics. So it's conjoined. So we did, for example, a podcast this week on this topic of who gets the money first, this Cantillon effect. I mean, we've looked at the Cantillon effect for well over a decade. It's the thing that will annoy you first, the Cantillon effect. If you don't know what the Cantillon effect is, then get into the podcast and have a look. But it's so agitated, it's not funny. But then you've got to look at that Cantillon effect and say, well, what's the probability of someone doing something for me? Namely, the government that was supposed to be working for the people, then your boss, then your bank. Well, the answer is none of them, right? They'll do what suits them first, and then it'll trickle down. That's the whole point of the Cantillon effect, right? Owning Bitcoin and hard, sound money and gold, etc., is the complete antithesis of that. It's the opposite. It allows you to be in front of, even years still, in front of what the average boss, bank and government are going to have to do when it comes to even their desire to kick the can down the road for the fiat system. That's what's basically happening when you look at USDT, Bitcoin treasuries, and CBDCs. So that's for the rest of our lifetime. I would suggest that they're going to keep kicking the can. Therefore, all you can do is make sure you've maneuvered into another stream, another channel, which takes you either higher up the Cantillon or puts you in a place whereby everything they do has a net beneficial effect to your hard asset balance sheet base. You're basically becoming your own treasury company. Yeah. So when you look at the geopolitics, it becomes even more obvious, right, why that's so important. And it's critical. And we try our best to stay in the retail end of the normal person end of this market. Yeah. But it's very, very difficult because obviously people have tendencies. But at the end of the day, if we can keep moving and driving and helping people to listen to what I've just said there and observe the Cantillon effect, then what happens in politics won't feel half as frightening. In fact, quite the opposite. You'll feel much more in control when you watch these clowns do what they do and try to get away with what they've got away with through monarchies, through religion, through all the different phases of human history. You know, go and read the history and go and look at human history and you'll see nothing's new in this world, right? History doesn't repeat, but it rhymes. And that's all we do. We're so high above it now that while we can't be the richest man in Babylon, that's why I do what I do every day myself. I try and make sure we get this message out as much as we can. At the same time, there is a sense of freedom that comes from understanding that everything going on this page is at best noise. So Russia's Congress said a bill to legalize Bitcoin and crypto trading for investors has officially now been drafted. Bitcoin coming to the 9th largest economy in the world. Now, you've got to really keep an eye. What's happening in Russia, whatever you think of Putin, is very much what I've just said, right? That guy understands history. That guy understands, what he believes as the right way for countries to operate. The propaganda and everything else that goes against that, in terms of what we pick up on the West, is probably more akin to the diabolical nature of the way the West operates and has operated for the past 600 years than it is necessarily about what we would pick up on as him bullying another country. When you understand the proxy war of the Ukraine, and you understand the implants, and you understand what went on in the last decade with regards to that war being allowed to happen in the first place, and the ostracization of what they did with Putin and all the way they're still doing it, and the European grannies and granddads, then you understand, right? I'm not saying it's right, wrong, or indifferent. You can't say that. But what we do know is that he's outplaying people right now, really, really well, actually, when you look at what's going on. And him moving more quickly with this legalization and the regulations around Bitcoin in particular is just testimony to that. In the meantime, the US are on their side of things, right, showing it's not the US up for what it is. It's showing up the hegemonic banking system from the Fed down for what it is. So the Fed shareholders, which are the big banks of the US, Bank of America, JP Morgan, etc., they now have come out very, very clearly wanting to be protecting themselves. 53 banking associations just wrote themselves a $6.6 trillion protection bill. Now, Coinbase stepped up and clearly went against the self-interest of the banks being able just to stick around with this 1.2, 1.5% APR that they offer consumers currently, right? While they take all the benefit of the 4 or 5% benefit of your money in their coffers up against US Treasuries. So US Treasury, typically 4 to 5% yield, as opposed to what they're giving you, if you're doing well at 1.5%, right? So that's very much in with the SEC. That's the securities and the banks, right? So this is what this has done. It's highlighted the standoff or the difference, if you want to see it that way, between the SEC and the CFTC, right? The Commodities and Trade people. So you've got the traditional banks over the SEC, and you've got the Coinbases of this world, the BlackRocks, the big asset managers over with the CFTC, right? You've got these two things going on. Now, obviously, they're going to find a compromise here. But what's interesting, and this is why we look under the hood so much, which gives us more of an indication as to why we do what we do every day. You would never have known this without the Clarity Act, and without social media, and without the ability for people to have a voice outside the brinkmanship and the mainstream media, right? You would not have picked this up. The odd mainstream media may have stated, look, here's the difference. The banks have got fat on the hog of providing people a place to put their cash. They then put that into US Treasuries and all sorts of different yielding mechanisms in order to create profits that the consumer will never even know about. And then they'll give you a pittance of an interest rate that isn't even higher than the deflationary rate of the purchasing power of the dollars that you're putting in. Like I said, it's debasing at 6 to 8% a year in purchasing power. You're getting what, 0.5%, 1% back if you're lucky? So the Coinbases of this world have stood up and said, well, no, why can't we be banks as well? Why can't we give access to consumers to be able to put funds with us, and we'll go direct to Treasury and take a proportion of this 4 or 5% and give more of that back to the consumers? How much more is anyone's guess? The bottom line is they're going to have to find a compromise, right? The real reality is they're both the same. The CFTC and the SEC are both the same. But the point here is that it's going through such a battle with the lobbyists and the politicians all having to just step back and pause things and say, oh, well, hang on a minute, I didn't see this coming. I've been making a lot of money as a politician. I've been making a lot of money as a banker. I've been making a lot of money as a lobbyist on the back of this hegemony. I'm not going to have it change overnight because of some upstart telling us that they're going to change the financial rails. That's America. In the meantime, China, in December, put their ECNY directly onto their treasuries as interest-bearing. And Russia are going to do the same thing. So the whole thing just shows you up in real time. Now, we've already known this, creature of Jekyll Island, blah, 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 blah. And this is what makes it more, the vindication is palpable, let's put it that way, right? Either way, the right side of history has to be that there will be interest for retail on stable coins. It just has to be. In other words, technology is taking over the show here, right? For good or bad, but it doesn't really matter because all this echoes back onto our private treasuries. That's why holding all these assets in self-custody is the only way. You'll keep hearing us say that over and over and over again. Then, on top of all that, the tariff threats resurface again, right? So Trump is obviously using tariffs to get whatever he wants, whenever he wants it, and bullying the rest of the world into submission. Everybody can see that. That's just noise. It's just noise. When you dig even deeper down and you look, listen, Cleone did a great webinar on this. I'll pop that link below as well today, talking about what's going on with Venezuela, with Greenland, rare earths and Iranian, all this is connected. Yes, you can go deep and get quite concerned if you're just looking at it from a mass media perspective. They'll frighten you to death, just like they did with the Cold War, just like they did with all sorts of things over the past 50, 60 years. The bottom line is when you understand why this is happening and the maneuvers around it, and you own self-custody and you own your own treasury, it doesn't really matter, which I know sounds quite blasé and self-interested, but what else are you going to do? Most people will stop in fear or I'll just give up. They'll just go, I'm out. I'm not voting. I'll live for 2 weeks holiday a year. As long as my kids are all right, as long as I'm healthy, as long as I've got my house, I'm out. That's what most people do. The vast majority of people do, if they even get a choice. What we're doing is saying, no, we understand the bigger maneuvers. We understand multipolar. We get now there is, thank goodness, a mechanism we can put ourselves onto since 2009 that runs its own life. It can't be controlled by anybody. It's called Bitcoin. And the whole idea is we use that as best we can to avoid all these unnecessary noises as we navigate this next few years. All right. So meanwhile, the Crypto Clarity Act is going through, or the Clarity Act generally, in terms of banking as it's now become. But we're also looking now at the market structure bill for crypto, which is all linked together, of course, right? Again, if you'd have asked me 5 years ago, would we want to be in this position in 2026 in terms of having clarity and regulation and organization and the absorbing of some element of the blockchain industry into TradFi? I'd have probably said, yeah, we should, right? 10 years ago, we gave up trying to fight this. You can't fight this system, not in our lifetimes. But what we can do is take advantage of the peripherals, and making sure that we're as close to the centre of money supply as we can. All right. Countries like South Korea pass tokenized security laws. Again, it's just more of the same. You'll get more and more and more and more of these countries watching what's going on with these bigger economies, China, Russia, US, etc., and they'll move forward accordingly. The Europeans are very, very lethargic on this. In fact, they're going to get some serious, looking at. I mean, the way that these bureaucrats have failed in the management of Europe it's disgusting, actually. And what you're going to get in Davos is just more showing up of these puppets, your Macrons and people like that. You can't Starmers. These are just puppets. Right? They've no power whatsoever, and they know it, which is why they do a lot of this working together bullshit. Right? Even countries like Belarus legalizes crypto banks, etc. They're watching it. They know it. It's coming. It's inevitable. It's tailwinds, and more power to our elbow as long as you own this stuff in self-custody. So I know that's a lot. It's always a lot, and I could carry on. But what we do, we have a neat little system. We're a very, very small, private little academy. We pick our battles. We work together. We make sure once we've started something, we keep going while there's validity in keeping going, that is. And we make sure that we're always looking for the next, because the model's the same. Fixed income, variable income, build equity, repeat. That's it. And you can do it online. You can be connected. We're well out of the industrial age now. We're even out of the communications age, right? We're into the AI age now. Yeah. Communications age probably lasted about 10 years, right? We're now in the AI age. So the whole idea is if you're not going to be using AI, it will use you. If you're not going to be using the system for your benefit with your own private treasury, your own private bank, be your own bank, banks will use you. If you're not going to start to step up and be your own boss and learn how to do things the way I've described and we talk about every single week at the academy, then the bosses will use you. That's it. Right? What's not to get? It doesn't have to be frightening. What it demands is a realization, absolute realization of what's going on in the world, right? In the real world, not all this noise, the real world, education, which is the bit obviously most people kick up about, and then application. So what we'll talk about next in part 2 of this session is what we do every week, every day to apply our education. And best of all, we help each other to do that. All right, so if you're interested in that next step, click the link below, see you in part 2, and we'll see you next time.